Everyone, and welcome to our webinar today on navigating tax disputes in Africa. As revenue authorities in the region are intensifying compliance programs to increase revenue collection, efficient dispute management by taxpayers is becoming increasingly important. I'm Celia Becker from the ENS Africa Regulatory and Business Intelligence Department, and I'm privileged to be joined by tax experts from 6 ENS offices today to discuss this topic in further detail. I'm pleased to introduce you to Cletus Banse from ENS Ghana, George Mutia, ENS Kenya, Srivan Dabi, ENS Mauritius, Dirone Nzafasha-Wanayo, ENS Rwanda, Andries Maaiburg, ENS South Africa, and Patrick Turinawe, ENS Uganda. As you saw on the slide, if you have any questions, please post them in the Q&A box and we'll discuss them at the end of the session. You're also welcome to email any questions that you may have to any of the panelists or your normal contact at ENS after the session. So let's kick off and maybe start talking a little bit about the common causes of tax disputes in Africa. So, George, if I can start with you, what are the trends that you've been seeing in East Africa? What are the type of topics that tax authorities are focusing on and potentially sending more assessments or audits or queries on? What is your experience in your region?
Yeah, thank you, Celia, and good afternoon, everyone. Celia, in this region, what we are tending to see is a lot of aggressiveness of tax authorities, driven by a growing mistrust between tax authorities and taxpayers on the one hand, and on the other hand, also tax shortfalls in terms of collections and the need to breach revenue collections at the country level. So what we've then seen over the last couple of years is we've seen increased number of disputes, tax disputes at all levels of the appeal process. And the types of disputes that we see in terms of, what gives rise to the disputes. One of the main areas where, disputes arise and, where tax authorities have been very good at picking on is where there's inconsistencies between what is declared by taxpayers in the tax records of the tax authorities vis-a-vis what they can actually support in their actual documents. And we see this, being a very low-hanging fruit, where tax authorities in this region tend to, pick up, numbers and say, this doesn't reconcile with that, and that gives rise to a dispute. Bearing in mind that the countries in this region, the East Africa region, the systems are self-assessment, where the taxpayer would be required to self-assess themselves, declare their tax, and then KRA or TRA, URA, whichever revenue authority will then come and determine, is this correct? There's also a lot of ambiguities and uncertainties in interpretation of tax laws, which gives rise to disputes here. And this sometimes arises out of the frequent legal changes in the tax legislations. Every year, you've got a tax law amending the other laws, and sometimes the changes are not managed very well. You also find that some of these amendments are not backed by an established tax policy that guides the legislative process. So what you find is, sometimes the changes are very mismatched, and that gives rise to disputes as well. In some instances, it's simply a case of an outright difference in interpretation. If you take, for instance, transfer pricing cases where a taxpayer takes a completely different view from that adopted by the revenue authority, and that in itself gives rise to a dispute. So there are various ways in which disputes do arise, but the common thread is what you see is tax authorities being a bit more aggressive, a bit more bold, also depending on the success rates at at tribunals or the high courts in terms of winning cases, and so they tend to want to push the line a little bit further. Yeah.
Thanks, George. Yeah, I think what we've seen, across the region is an increased chase of revenue. I think tax authorities are all under a lot of pressure to collect more from taxpayers, and hence, all these kind of increased activity that you've been seeing. Thanks, George. Cletus, if we move to West Africa and maybe Ghana specifically, what have you seen on your side?
Thank you, Celia. So when I was listening to George, it appears that it's a common thread. There's increased pressure on government in the West African region. The external funding options are increasingly under pressure. So government, it's also under pressure to ensure that revenue administrations meet, their targets. And because of these high targets that the revenue administrations are required to meet, it then drives audits, and which sometimes care is not taken, and the revenue administration is in a pressure to conclude those audits in a way that will increase revenue, and sometimes mistakes are made, or they are even blatant intentional decisions that are made that are not in line with the tax laws, and this results in tax disputes that sometimes when it gets to the court, they are corrected, but before it gets to the court, usually taxpayers will suffer a lot because they have to make some deposits that puts pressure on the businesses. The other area in which becomes a common issue for disputes is vagueness in some of the tax legislation. So there are some aspects of the tax legislation that appears vague, and it becomes an area for disputes. If you pick one area in our income tax legislation, which on changing underlying ownership, it's a recent provision in our tax laws. This has generated a lot of issues or controversy between the tax administration and taxpayers. And it's causing a lot of dispute because there's no clarity in a lot of the areas as to what even constitutes a change in underlying ownership. So that has become a major issue for, of dispute between taxpayers and then the tax revenue administration. The other common area is just documentation. There are so many taxpayers who just do not have the documentation in place, and they become liable for taxes not because they haven't paid or comply with the payment of their tax obligations, but they haven't kept the relevant documentation to show to the revenue administration when during audit that this is the taxes that we have paid. These are the documents to back the supporting documents to back the payment or compliance with the tax obligations, and this is a major issue for tax disputes because the taxpayers believe that they have complied with the payment of taxes, and the revenue administration demands records to support that, and sometimes those records are not available. So it's a key issue. And one other area is just sometimes incompetence. You have, and this can go in the way of the taxpayers and then also the revenue administration. You can have tax officers who are just do not understand certain aspects of the law, and their interpretation is just way off what is required of the tax laws. And also on the side of taxpayers, you have some taxpayers who do not have the the requisite accounting staff who are able to understand the need to comply with the tax laws, and therefore in terms of filing, in terms of the documentation, and in terms of basic compliance, they are not able to do that, and therefore it gives rise to tax dispute. So, and this is a common thread around the West African region. Thank you.
Thanks, Cletus. Yeah, there seems to be lots of similarities, as you say, between East and West Africa. Andries, if we move to Southern Africa, have you experienced similar trends around our region?
Yes, Celia, thanks for that. Yeah, I think probably you see worldwide the revenue authorities becoming more aggressive. You can just look in the printed media or the digital media, you will see that there's cases coming, and you can see revenue authorities are more, aggressive and willing to take matters to the relevant courts or tribunals. So particularly in South Africa, obviously, you also see that the revenue authority would actually, when they do an audit and they issue an assessment, actually impose quite hefty penalties. So not just the taxes, whether it's a value-added tax or income tax, or in the mining industry, specific mineral royalties. Whenever they disagree with a taxpayer's position taken in the tax returns, then they will most definitely levy understatement penalties. And we probably will look at it later on, but the moment there's an assessment, then generally it's pay now, argue later, pending your objection and appeal or other proceedings to take the matter to be resolved through the courts. So particular, we see transfer pricing, as Cletus has mentioned, I think is quite a topical worldwide issue, but particularly also in South Africa and Southern Africa. And also value-added tax refunds. So they are sticky to pay out refunds. So obviously one must always be very mindful of, whenever you prepare your returns, you have, as Cletus also say, all the supporting documentation, so that if and when a revenue authority commence an audit and investigate the relevant tax, that you are actually dealing it in a quite comprehensive and swiftly manner to avoid, issuing assessments. So yes, I think it's, like worldwide trend in the rest of Africa, Southern Africa revenue authorities. Remember that the job of a revenue authority is to administer the tax legislation, and also make sure that the correct amount of revenue are collected. And that's where the emphasis is, the correct amount. So sometimes you get revenue officials who do audits who, may not interpret the legislation 100% as you would think it would be, and therefore you get sometimes assessments which shouldn't be there. So yeah, I think taxpayers must be very vigilant and mindful from the moment they file returns to have all the documents, so that even when the audit arises, they are in a position to defend that position, preferably not going to the courts or the tribunals, and therefore manage that process. But yeah, I think it's a general trend, and Southern Africa is no different from the rest of Africa, and for that matter, the world.
No, thanks, Andries. And we'll chat a bit later more on practical solutions of managing disputes that come up and how to preempt it almost. But maybe just if we look at what tax dispute resolution mechanisms are available, I think when we did our preparation call, I think what we picked up is there's a lot of similar practices or options available in many of the jurisdictions, from tribunals to dedicated tax courts, to alternative dispute resolution mechanisms. But maybe just to give our audience a bit of a feel for that, Shravan, what have you seen in Mauritius, and what dispute resolution mechanisms are currently available or in the pipeline?
Thank you, Celia. So as things stand right now, the tax dispute resolution mechanism in Mauritius is done mostly at the level of what we call the Assessment Review Committee, which is an adjudicatory panel which is independent from the tax authority. However, it's not a full-fledged tribunal, and stakeholders have been complaining about this. What this means in effect is that its jurisdiction is quite limited, And when we look at assessments and when we look at notices issued by the tax authority in Mauritius, and they are getting more and more aggressive, at times we take the view that there are certain points which are not pure tax points, but which are public law arguments. In Mauritius, it is quite customary that certain tax breaks or tax holidays or exemptions are obtained when industry associations make representations to the Minister of Finance ahead of budgetary talks. But then we also see that the tax authorities adopt a line that is different to what has been adopted previously or to what has been accepted between the minister and the industry associations. What we've welcomed recently is that there is a new tax appeal tribunal which is coming into the landscape and which will replace the current committee. The law has been voted. We are waiting its full promulgation and adoption. I understand from my discussions that there are certain administrative steps that need to be completed for the tribunal to come into force. In practice, what this means is that there will be one venue, whether you decide to go on public law arguments or pure tax law arguments, or as is more often the case, a combination of both. There will be a single venue that will be mandated to deal with everything. And I think this is a welcome development in the landscape. It will be more efficient. We will spend less time deciding on which arguments to run because we'll be able to run all the arguments. We've also seen in an effort to collect tax, the Mauritius Revenue Authority coming up with two different schemes. And one of the schemes is for the possibility to have full exemption in terms of interest and penalties. Those amounts can be hefty in some cases. And as a matter of fact, there has been a communique and publication of relevant materials by the Mauritius Revenue Authority yesterday itself on a scheme which allows for full waiver of interest and penalties. Alongside this, there's another one which allows for a formal setup for the negotiation of lower pure tax rates, which here we are speaking about the possibility of lowering the pure tax, and in the other one of interest and penalties. And I think those are two schemes which are very much welcome. For the second one, which is about the waiver of penalties and interest, the deadline is the 31st of December of this year for application. And there are certain conditions in respect of both. The main one being that the taxpayer has not been convicted of any criminal offense, but there are a couple of other ones, and we can obviously speak about them.
Thanks, Ravon. Yeah, I think that's a trend that we've seen across Africa, this kind of waiver of penalties and interest for settling outstanding taxes. I know Namibia has had a program like that has been renewed a few times, and I've seen it in Tanzania and a few other countries as well. But yeah, and I think that's a nice incentive that tax authorities often implement, to try and avoid further disputes. But thanks for that. Then Cletus, you mentioned that in Ghana, there has been a recent introduction of a tax tribunal, but there has been some challenges with the practical implementation of that. Tell us more about that, please.
Yes, Sila. So in terms of our current or before the introduction of this tribunal, what we have is for tax disputes, usually the head of the revenue administration, that's the Commissioner General, will, if a taxpayer is dissatisfied, you go before the Commissioner General, who will look at the taxpayer's concerns, and then if the Commissioner General agrees, then the decision is revised. If the Commissioner General thinks that his or her auditors have done the right, and then the taxpayer goes to the court. But now we have a tax tribunal which has been established to come in between the decision of the Commissioner General and then the court. So if a taxpayer is dissatisfied with a decision of the Revenue Authority, the next place is to go to the Independent Tax Appeals Board, which is made up of independent and tax experts who are supposed to hear the taxpayer and then decide whether the taxpayer's concerns are right or otherwise. And when the taxpayer is dissatisfied with that, the decision of the the Independent Tax Appeals Board, the next place is to go to court. If the Revenue Administration is also dissatisfied with the Independent Tax Appeals Board, then the Revenue Administration can also appeal to the court. But this tribunal has been established. The members have been sworn in, established, but there are challenges in terms of implementation. We understand their guiding regulations are still not in place. Then it creates it leaves taxpayers in a dilemma when they have a decision of the the Commissioner General, whether to go to this tribunal or to go to the High Court, because by law, the tribunal is in place. So if you skip and go to the High Court, the Commissioner General can raise an objection at the High Court that your next place to go is the tribunal and not the High Court. And when you also go to the tribunal will tell you that they are not yet operational. So it creates a dilemma. So we have devised a way in which we overcome this because we will appeal to this tribunal and then proceed to the court and get confirmation from the tribunal that they are not operational. And then we proceed to the court because the taxpayer cannot be left hanging until when the tribunal becomes operational. So this has created a lot of issues. We have a current issue where the Revenue Administration is objecting to our appeal at the High Court that we ought to have gone to the tribunal and not the High Court. And then what we did is the judge asks whether the tribunal is operational. Then we said, well, the judge should ask the Revenue Administration whether the tribunal is operational. The Revenue Administration said, no, it's not operational. Then the judge said, if it's not operational, why do you want the taxpayer to go there when you know it's not operational? So it's created a dilemma and a lot of controversy. But we found an innovative way to deal with it in order not to get the taxpayer, overrun by a technical issue.
Oh, perfect. Thanks, Cletus. Yeah, that's always a challenge, and the taxpayer sits in the middle of all these, administrative issues. Thanks for that, Cletus. George, what have you seen in Kenya and in other East African countries?
The tax dispute resolution process is quite similar to what Cletus has just described, and you've got in all the countries, most of the countries in this region, let me say, your dispute would start off from an objection to an assessment from a tax authority, going on to a committee stage where a separate committee reviews the objection and determines will this then is there agreement on settlement of this. In Kenya we call it the independent review of objections. In Uganda it's the ADR committee. And then if there's still following this stage, then the matter then moves on to a tribunal, which is a quasi-judicial forum and essentially functions as the trial court. Now thereafter, if the dispute still carries on, then it goes on the way to the High Court and Court of Appeal, and you still got other settlement options, such as ADR, alternative dispute resolution. Yeah, I think what would be important to mention here, a couple of points would be important to mention when you've got a dispute, at a tribunal stage, and what we tend to see here. Some of the countries in this region do have what we call a pay-to-play rule. Yeah, so you've got a country like Uganda requires you to make a payment of 30% of the tax that is in dispute, or the tax that is not in dispute, whichever is greater. And you've got a similar rule in Tanzania as well, and even as high as 50% in Ethiopia. So what this then does, then it then tends to throw a spanner in the works in terms of how the dispute gets resolved, and what view taxpayers can really take in terms of how to proceed. Higher courts, if you take, say, Kenya, for instance, only admit tax cases where it's a question of law that's been determined. So you will not have an appeal from, say, a tribunal to the High Court in Kenya where there's a question of facts. The courts will not admit that. Yeah. Now, what's interesting is, like I said, there's an option of pursuing an alternative dispute resolution process, which is separate from going through the whole court system. The benefits of this, usually, in taking a broad perspective, is there's a promise of the tax dispute being resolved in a shorter period of time. Yeah. Court cases do take elongated periods of time, and going through the whole process, as you can imagine, from, say, the tribunal stage all the way to, if the matter proceeds to the Court of Appeal, you're really looking at a couple of years. Yeah. So if you've got an ADR, as we call it in Kenya, or remediation in Uganda, or amicable settlement in Rwanda, the process allows you to then try and reach a settlement with the tax authority over a shorter period of time. In the same way, you also get to to save costs, because you've got a shorter dispute. Yeah. And also, it does help in preserving relationships, rather than going the adversarial way of bidding courts against the tax authority. You're in meetings and you're trying to find a middle ground, and it sort of works well in that regard. Now, this doesn't mean that there are no downsides to this process, yeah, because there are some challenges which we've seen in practice.
Yeah, I think, sorry to interrupt, Roger. Yeah, I think Tironay and Patrick has a lot to add on the downsides of the ADR process. But is there anything specific you want to highlight?
Just to say that at the end of the day, it really is a non-binding process, and really relies on the goodwill of both parties for it to work well. Without which, then it really just crumbles.
Yeah, 100%. Thanks. Yeah, and I think you've nicely summarized the potential benefits of an alternative dispute resolution process, and I think of which the two main ones are hopefully a reduced cost and time period to address it. But I think, as you've alluded to, there's a lot of challenges sometimes with alternative dispute resolution processes, and I think the most important one being the pay now, argue later principle. And Patrick, I know you guys have done a lot of work in Uganda on that specifically. Do you want to tell us a bit more about that?
Yes, thank you, Celia, and everyone. So 30% payment of the tax assessed is a condition. It's a precondition to challenging the tax before the tax appeals tribunal in Uganda, and as George has mentioned, in some other jurisdictions, and it is strictly complied with in most of the circumstances, that your case will not proceed to be heard if at all 30% has not been heard. Recently, the Revenue Authority has even been very vigilant to make sure that even a mediation will not proceed if at all there is no proof that the 30% has been paid. It has been challenged in the Constitutional Court up to the Supreme Court on grounds that this 30% restrains access to justice for taxpayers. And in some cases, we've seen where the tax authority issues a ridiculous tax assessment. It is baseless. You have to challenge it, and they remain the winner because you have to at least pay 30% of that baseless tax assessment. So the courts have upheld that it is a constitutional provision to support the mechanisms of collecting tax, and to also avoid taxpayers taking it for granted that you can just go and challenge every tax assessment. The courts have, however, given a life to the fact that if at all the challenge is on the law, the tax law, then you do not have to pay the 30%. And that has given a breath of fresh air to taxpayers who are challenging the lawfulness of a particular component of tax. One of the other challenges we faced is that it has been very stringent in making sure that the payment is directly made to the Revenue Authority, and that you do not have other modes of payment, let us say by bank guarantee. Such modes have not been accepted, which would have eased a taxpayer's burden with cash flows and the like. And lastly, maybe the other challenge we have seen is that the Revenue Authority has gone ahead to even issue agency notices against a taxpayer for a delayed payment of the 30%. That is it's absurd and unlawful. The Tax Appeals Tribunal is yet to make a ruling on such a matter, but we have engaged in a similar matter, and the Tax Appeals Tribunal was very clear that at the bare minimum, the tribunal should make a ruling, make a finding on and give guidelines on the payment of the 30%, as long as the matter is before it. But the Revenue Authority has no mandate to issue agency notices when the matter is already before the tribunal.
Thanks, Patrick. And you mentioned that these agency notices are mainly issued against banks where taxpayers actually hold bank accounts. Is that correct?
Yes, they're mainly issued against financial institutions where the taxpayer has funds. But we've also seen incidences whereby if the taxpayer is the kind who has third-party collections, for instance, like a factory, a manufacturer who has distributors paying into the company, the taxpayers' accounts, those agency notices have been issued to those third parties, like distributors, to directly pay to the Revenue Authority.
Thanks, Patrick. Yeah, I think this is a general challenge across most of the countries that we've looked at. I think Rwanda is probably the only country we didn't know, if I'm not mistaken. That's the only country that of the 6 that we're looking at here that doesn't have a pay now, argue later principle. Is that right? You don't know?
Yes, you're right, Celia. The principle kind of exists in Rwanda, but not in the same format as it exists in other countries. Because, for instance, as you can imagine, and that's assuming to be the case in other countries, so when the tax liability is assessed, so the taxpayer has to pay whether they challenge the tax liability before the Commissioner General, in amicable settlement, or even before courts. But the difference between one and other countries, you don't need to make that whatever 10%, 25%, 30% before you challenge the tax assessed before courts. So that's where Rwanda is a bit different from other jurisdictions. But of course, when it comes to amicable settlement, then the same principle kind of applies, because in terms of the Commissioner General rules on modalities of amicable settlement, you need to pay 25%, before you can apply for amicable settlement of a tax dispute. But again, on this one, amicable settlement, obviously it's optional. You don't have to go there. You can immediately go to court. And when you go to court, in that case, you're not required to make the payment. Although the Revenue Authority may eventually take enforcement and recovery measures regarding the assessed tax liability. And the good thing is that if the matter is already in court and the taxpayer feels like they need to pursue the amicable settlement route, in that case, they can apply for it. And in that case, the 25% down payment would not be required. So I think there is some sort of flexibility, in Rwanda. Of course, although amicable settlement may have its own limitations.
Sure. No, thanks, Dylan. Yeah, I think this is one of the biggest challenges of alternative dispute resolution options, but there's obviously other challenges as well. I think Keith has alluded to the tribunal that was implemented, but it's not operational yet, that creates all sorts of challenges for taxpayers. What other challenges have you experienced, Dylan, and are you aware of, of making use of alternative dispute resolution mechanisms?
Thanks, Celia. I mean, the main challenge here, I would say, unlike other jurisdictions that are here represented on the panel, so Rwanda does not have a specialized or dedicated tax tribunal, tax court, or an assessment review committee that is independent, as is the case in Mauritius. So that basically means that if a taxpayer is not happy with the tax assessment, they either have to go and then the objective before the Commissioner General, and the Commissioner General maintains the position of the audit, then they either have to go to the court or consider the amicable settlement allowed. So, and that's constitutes a big challenge because, and this is actually common to many African jurisdictions. The tax administration, Cletus and George have alluded to the tax administration becoming aggressive. But it's also a fact that the tax administration now become more and more sophisticated. So owing to a number of things, the work ATAF have been doing, trying to equip them with the skills and competencies required, especially when dealing with cross-border transactions, right? So now, in that specific case where you have the tax administration getting sophisticated and the taxpayers, of course, working with the advisors, coming up with sophisticated, transactions and business structures, then it is also expected to have like a judiciary that is equally sophisticated, which would be able to handle those complex, the dispute arising from those complex structures. And unfortunately, when you have to appear before an ordinary court judge who is today handling commercial cases, and basically various commercial matters, and then they are faced with a complex tax dispute, you understand the limitations that may be there. So this is one of basically the main challenge. And then another challenge, which is similar to other African countries, it relates to the vagueness in some of the provisions of the tax laws. So where I think last week I was assisting a client who was being audited, and we had disagreeing with the revenue authority about the definition of a related person, because when you look at the definition in the law, you realize that the related person is defined quite broadly, and unfortunately, tax administration in Africa are holding their feet, issuing administrative guidance, maybe at least for the taxpayers to know their position and then be certain about what they are doing. And even when you request a ruling, maybe it may take months and months to get it. And that also, remains a big challenge, when it comes to tax dispute in Rwanda, and I think this also applies to many other African countries. Another challenge, I think, relates more about the alignment of expectations between the taxpayers and the tax administration. So, because like of recent, we've seen like a shift in focus where the tax administrations are much more scrutinizing cross-border transactions, and the issue of documentation is becoming a serious one. And unfortunately, so think of the intragroup services, which is one of the areas where we see a lot of scrutiny from the side of the tax administration. So when it comes to the documentation required from the taxpayers to support such kind of transactions, there is no clarity as such. The tax administration may, one day say, oh, by the way, we need a timesheet, to show the amount of time spent by an employee of the service center performing these services. There may be any legal basis for that. So, and you realize that to a certain extent, there are surprises on the side of the taxpayers, and that would of course be one of the areas where there will be dispute, and the taxpayers would be kind of helpless. The last challenge, I think, is more about amicable settlement, as I've indicated. So if a taxpayer is not happy with the decision of the Commissioner General on the appeal against the assessed tax, they can go to amicable settlement or go directly to court. So now the challenge here is that the rules of the Commissioner General provides for a 90-day period for the amicable settlement to be concluded. But in our experience, we've seen this taking longer than that, especially when the dispute is complex. And in addition to that, even the amount of files that have to be handled by the team at the Revenue Authority. But this is a challenge on the side of the taxpayers, because they need to decide. They need to know what to do. They need to know when this is coming to an end, because sometimes they need to keep, some provision for such kind of dispute. So the amount of time that takes to get a matter, in amicable settlement concluded, and unfortunately may even end up being rejected after having waited for 5 months. So is also another challenge. And to that, the fact that the amicable settlement is handled by the tax administration's team, which is quote unquote not independent, that's also I think another challenge. So those are generally the challenges have this side. Thank you. Yeah.
Thanks, Ilona. Yeah, and I think a lot of these challenges that you highlight seems to be relevant for the other countries as well. Thank you. Yeah, I think what is clear from the discussion so far is that authorities are definitely becoming more aggressive, more sophisticated in the types of matters that they kind of assess and raise, and it's getting more and more important for taxpayers to effectively have their ducks in a row. Andries, I know you have some suggestions of, the best practices and strategies for efficient tax dispute resolution, and making sure that you do everything correctly from the start, so that you're not caught short later on in the process. Tell us more about that, please.
Yeah, so I always say to clients, and I think it applies probably across the board in Africa, but obviously I mainly work with clients in South Africa and sometimes in jurisdictions like Zimbabwe. But I always say, obviously make sure when you file your return, if there's a certain uncertain tax position that may be contentious, obviously get your proper advice from your tax attorney, and have it on file that support your position. So whenever you prepare a return, you must take utmost care that what you disclose and the position you take in certain things in the return is absolutely defendable. Then I always say when the Revenue Authority initiates an audit and asks for information, take absolute care. What taxes is it? Is it more than one tax? Potentially, what is the issue they're focusing on? So take extra care when consider that request for information, that what you give to them, you've actually gone through it and applied your mind. And I always say, if you want peace, you must prepare for war. So what do I mean by that? So take extra care, and that if it's a matter that you think potentially could result in a dispute going to court, you must be handling it from the very beginning, so that if you need to go to court, you are in a position to defend your position. So, but throughout the process, I think the aim must be always to avoid an adverse assessment, because we've all heard now that apart from maybe one or a few countries in Africa, most jurisdictions has the so-called pay now, argue later principle. And for example, South Africa has quite an advanced system. It has already been challenged in 2000 in our Constitutional Court, where it's held to be constitutional based on international best practices. And in 2012, when the Tax Administration Act came into force, obviously that was more sort of formalized the process. But for example, a recent experience I had in Zimbabwe, where we assisted client on VAT on imported services. So there the Revenue Authority issued an adverse assessment, and immediately the tax clearance certificate is in jeopardy, and they need a tax clearance certificate for their tenders and their operations. So without that, you can't operate, and sometimes your suppliers will withhold money from the payments if you don't provide that. So they wasn't aware, the client, of that Zimbabwe also has a principle for pay now, argue later, but they didn't know is that in the Income Tax Act and the VAT Act, there are separate provisions that do allow a taxpayer to ask the Commissioner General to actually suspend that payment pending the objection and appeal. So I think you need to understand also as a client or a taxpayer, what is the possible remedies that you have in your arsenal? Obviously, as I say, answer those questions, giving the information, if necessary, set up a meeting with the revenue auditor that is doing it, and explain the position. Because a lot of the time you give a lot of information, and remember, the revenue auditor will look at the first time to these things, and it may be very complex transactions. And also if it's transfer pricing, obviously that is very expert evidence and fact intensive. So you need to manage that process from the very good. And I say the intention is to try and avoid an assessment. But the moment you have an assessment, obviously you must know what is the position you're going to take to defend that. Obviously, you have your normal process for if you have a tax tribunal or a tax court in South Africa. You obviously need to go through that, but that's a trial process. So it's discovery, it's factual witnesses, it's expert witnesses, and it could be a long, protracted process. So when you're providing information, try and make sure that the facts on the particular issue that's being audited is as possible as you can, that there's no dispute of fact, because that opens you up that it's a purely statutory or legal interpretation to potentially have other remedies just didn't go through a protected dispute resolution process, which is trial proceedings. For example, consider remedies like bringing an application in the High Court for a declarator on the meaning of a provision, or even if necessary, take an administrative process on the review. So I think, clients must be, from the very outset, take absolute care, and to summarize it, is try and avoid an assessment. But if you do get an assessment, you're in a position to defend your position either through the tax courts or the tribunals, or possibly through any other alternative remedy you have through other courts. So that's why I always said, client is, if you want peace, prepare for war. You must be absolutely ready to be in a position. That also will put you in a position, if and when the opportunity arises, to be in a position to have a settlement with with the Revenue Authority, and to get a settlement that's to the best advantage. But sometimes, for example, transfer pricing matters. The question is, if, say, 2 years is under consideration and there's a transaction and you settle that, what is the impact of that settlement in subsequent years? So if you say the pricing on that arrangement is you pay a portion and say, without admitting it, it's arm's length, and also to get out of penalties and interest potentially, you must also consider what is the impact in subsequent years. So I think it's my advice to taxpayers who doesn't have in-house tax employees, or even where they do, obviously just work closely with your tax attorneys and lawyers and manage that process, and consider all avenues that's possible that you can manage that process, preferably to avoid an assessment. But if that is unavoidable, then put yourself in the position to best defend that position, going through the relevant process.
Thanks, Andries. I think that's very good practical advice. I see there's some interesting questions that has been posted in the Q&A, and I would like to get to that. But before then, maybe just giving a few of our other panelists a chance for some practical tips and guidance in their specific jurisdictions. Patrick, if I can ask you, maybe what would you suggest for clients in Uganda and maybe generally?
Thank you. Without repeating some of the good advice that Andres has mentioned, is I'd like to emphasize the aspect of being able to look out for possible remedies that the client might have, right from the tax heads that are being audited and assessments that are issued. In the recent matter we've been handling concerning 30%, the client came to us. They didn't know that they could pay the 30% in installments, and we're able to support them on that, and they've been able to. The sum is quite huge, so they have about 5 months within which to pay. So you are able to explore opportunities to try and help you. Then the other question is to scrutinize the tax heads that are being assessed, whether it is VAT, whether it is a new area of tax that has not been you've not been appraised before. You have to scrutinize it carefully. Recently, we've seen a huge scenario coming up whereby the Revenue Authority has been taxing taxpayers on tax that didn't exist in the law. So it was baseless, but this has been going on for years. So it's something that the taxpayer has to scrutinize, seek advice. Don't be worried of challenging it or asking questions. And that's why your tax advisors are there. And lastly is to be bold enough to challenge. There is a big fear about challenging the revenue authorities because of whatever implications. You might be in their bad books. At times they're collaborative, and you may lose the goodwill and these kind of things. It is normal to engage the Revenue Authority and challenge them or question some of the tax heads they're issuing. And we've given examples in Uganda where multinational organizations have challenged the authority. Even government entities, independent entities have challenged the Revenue Authority. So it is normal to do that, and we hope that it's helpful for our clients. Thank you.
Thanks, Patrick. Shrivan, any suggestions from you?
Thank you, Celia. I join in what has been stated earlier on by my colleagues. Perhaps a very Mauritian matter to issue, rather, to bear in mind is that an additional development in Mauritius, and another welcome one, if I may say so, is the shortening of a limitation period for the Revenue Authority to raise assessment. So previously it was 3 years from the year of assessment. Now it's been shortened to 2 years. So, but what this means in practical terms is that in the short term, at least, I see the Revenue Authority just issuing assessments and half-baked assessments increasingly just to meet the limitation period. But over the midterm, I believe this would be something very useful and helpful for taxpayers. I do, in terms of practical advice to all clients, I do, and I think this has been touched upon earlier on, I do urge them to keep proper records of all of what they do. Intra-company arrangements in Mauritius are very common. Shared services, common management by conglomerate of its subsidiaries. And this raises many tax issues. At times, service level agreements are outdated, and a real transfer pricing audit is not carried out sufficiently often to see and to review the rates and prices. So I urge them to do that as often as possible. Obviously, every 2 years, every 3 years should be fine, but they need to do it. And they need to keep records of what they've done. Need to keep proper records of the rates that have been applied, and avoid having one single rate for all the services. human resources services provided to subsidiaries can be a very different rate from let's say project finance or accounting and so on. So keep all of that. Make sure you run a proper audit from time to time. An additional and final matter for in terms of practical advice: keep a proper record of all employee benefits that you give, and document all of those. There are so many issues that arise in terms of what is a benefit and what is a reimbursement of expenses in Mauritius, and because Mauritius is used as a place to recruit people and employ people to be sent over the continent on secondments. So keep a and this raises all the time tax residency questions and all of that. So again, keep a proper record of all of what you do, not only in terms of employment contracts, but in terms of how the secondment takes place in practice and what do those employees do in practice, where they are offering the services and all of that. Keep them and ensure that they are updated as often as possible.
Thanks, Rivan. Yeah, I think I wanted to give everyone else a chance to give their tips, but I want to get to a few questions before we run out of time. So maybe if you just look at some of the questions, I see one of the questions is specifically relating to transfer pricing. The person is asking, while considering the increased cross-border investments in Africa, how are tax authorities handling transfer pricing disputes, and what best practices exist for resolving conflicts before they escalate to litigation? Sorry. Renee, I think you mentioned some transfer pricing disputes previously. I don't know if you want to comment on this one.
Sure, Celia, I can definitely comment on that. So I think, of course, there is a kind of conflict. There are two competing interests. On one side, our countries need to attract foreign investment, and they need to position themselves as FDI destinations. But on the other side, there's also a need to collect revenue to fund public expenses, and you're not going to let someone going and tax because just they're a foreign investor. So I think they have been kind of try to strike a balance between those two competing interests. So where the taxpayers have not complied with the arm's length principle in terms of having supporting documents, supporting the transaction they have entered into, they will definitely be assessed. But I think one of the ways I can see most of the African countries exploring to deal with these issues is to have, in the first instance, safe harbors, where, you would have, let's say, if it's financing transaction, you would say that the safe harbor rate is 5%, so that the taxpayers at least expect to know what's going to be accepted by the tax administration. We are yet to have that in Rwanda, but other countries have been exploring that. So there is also this aspect of adverse pricing agreement, which is very important in the transfer pricing area. A lot of countries are rolling that out. I think even in Rwanda, we currently have the draft ministerial order providing for the general rules for transfer pricing, and part of the new provisions under the same rules is the aspect of adverse pricing arrangements. So, and those, I think, would to a certain extent bring like a cooperative, a collaborative way between the tax administration and taxpayers to manage, or to limit transfer pricing disputes. Yep. Thank you.
Thanks, Dieudonné. And I think an interesting question to me is like someone was asking, what is your experience with MAP, or the mutual agreement procedures to resolve cross-border disputes? I'm not sure if there's anyone on the panel that have any or recent experience with that. Andries, you want to take that?
So obviously that is one of your potential remedies, if you want to call it, in your arsenal. So one must always, the moment you have a transaction which is a cross-border transaction, then obviously if it's the host jurisdiction and a foreign jurisdiction involved, obviously each revenue authority will try and maximize the amount of tax from that as possible. So we've done a few in South Africa, although I think it's not that developed as, like, for example, in Europe, where I think the various revenue authorities actually are asked to assist taxpayers with mutual agreement procedures. We've done it recently, particularly in a transfer pricing perspective, in particular between South Africa and Switzerland. So obviously you put in the application, and we advise the client to put in a MAP application to the competent authority in South Africa, which is SARS, which has a specialized unit for that, and then also to put it in through an advisor in Switzerland to their Swiss authority there. So it has been handled by both authorities. And depends whether it's a transfer pricing where you ask for corresponding adjustments, or just sometimes an interpretational issue. So the matters that we had was transfer pricing, but we particularly said it was an interpretational issue on a particular Article 9 in the Swiss SA Treaty dealing with associated enterprises and transfer pricing that has an absolute prohibition, a 5-year prescription rule. So we said that South Africa issued the assessments in prohibition of that 5-year prescription rule. Says in any case after 5 years of your financial year, you can't issue an assessment. So we asked the two authorities to consider that and come to an agreement. So, the treaty also make, if the parties can't come to an agreement, then you can ask them to refer it to arbitration. But again, between the Swiss authority and SA, they haven't put the framework together of how that arbitration process will be dealt with. So it's really new in my experience, and I think although there's some in it, but it's always an option, and we've put that in place together with the normal dispute resolution process through the tax court. So I think that's always one that one has to consider and get advice on whether simultaneous. I know there's a recent case that says that obviously it depends on how the relevant double tax agreement reads. If you want to refer it to MAP, then you must suspend your dispute resolution process. So there you must bear in mind that if you can't come to a resolution, then your MAP and you suspend it, and many years down the line, if you have to go to the tax court now, you have to call witnesses, get expert witnesses, etc. And sometimes, people move on. So it actually potentially hampers you if you have to go through the tax court process or the tax tribunal, that you end up that. So it's like I say, whenever you get a query from the very outset, sit down, consider your options. And one of it is obviously mutual agreement procedures, but I think it's not as developed and known in, I think, South Africa, and I would venture probably the rest of Africa, as in Europe, for example.
Thanks, Andries. I think we're out of time. I see there's specific questions for Uganda, Ghana, Kenya, and also for South Africa. So I'll share those with the relevant panelists for them to respond directly to you. If I can just ask the person that has raised a question on the change of control provisions in Ghana and Uganda, just to share your details. On our side, it's just shown as an anonymous attendee. So if you share your email address, I'll ask Cletus and Patrick to respond to you. But yeah, I think thank you so much for everyone attending. Someone has also asked, can we please share the contact details for the presenters? There will be an email distributed afterwards. We will include all the contact details for the presenters. So all that remains for me is to thank the panel. I think everyone, thank you so much. That this was really interesting. And I think the amount of questions is an indication, I think, that our audience was interested as well. So thank you for your time, and thanks to everyone for attending, and feel free to reach out to any of the panelists if you need further assistance. Enjoy the rest of your day. Thanks.
Thanks, everyone.
Thank you.
Thank you.
Thank you. Good day.